Welcome everyone back with Paul Cox, Senior Director at Freedom Gold USA, and we have a whole lot to talk about as we're wrapping up 2024, going to 2025. And Paul, first off, Merry Christmas, Happy Holidays to you.
Merry Christmas to you too.
Let's kind of start there, getting towards the end of the year, and people are talking about forecasting.
Yeah.
Some are saying, gold prices, no one really has a crystal ball right now, but could go down next year. But I
Mhm.
want you to kind of describe or discuss why gold going down is actually a good thing, potentially in the long term.
Well, first of all, there's more reasons why gold is going to go up than go down.
Mm.
But um, as we saw when President Trump was reelected, or the former president to be the new president, is that there was this exaggerated, or rather, what do they call it? Um, Irrational exuberance, for no other reason than, oh, things are going to get great. So what happened was the stock market shot up, which necessarily pulls money from the DXY, so the dollars go into the stock market, pushing it up. And the way that reads in the gold business is when the dollar goes down, gold goes up, right? Typically.
Mm-hmm.
But excuse me, when the value or dollar goes up, gold goes down, right? They're inversely related. That coupling doesn't always um, adhere, but typically it's a reciprocal relationship. There's more excitement about um, big business kind of growing with Trump in the office. So it's gold is a inflation hedge or a volatility hedge or a you know uh, a protection hedge. So there's this near term belief like everything's going to be okay. The So that's why we saw gold pull back 100 bucks only. Don't forget it in the past year it's been up almost 40%.
Mm-hmm.
So it pulling back to around 26.50 and staying there for the last 2 or 3 weeks or whatever it is, it's building up a solid base. Okay. And to answer your question, like gold going, the price going down, it's a somewhat of a paradox from my perspective. If you were looking to buy a car and you had your eye on one that's in the lot and you saw the price of it and like that's the car I'm going to get. That's what I'm going to buy it. The next week you drove, and you know why you need a car, right? You need a car for, get back and forth, to live your life, right? So you're clear on why you need a car. And imagine you go back the next week and the price has gone down on that car. And you say to yourself, "Ooh, I'm going to wait till it goes back up." If you know why you need the car, you're going to buy it, right? Because it's
Mm-hmm.
going down, and maybe that's a short-term pullback or whatever, and you're going to take advantage of it. If you know why you need gold, long-term protection of purchasing power, um, and the kind of a safety hedge or insurance for what could potentially unveil, the unknown, then you take advantage of a pullback.
Mm-hmm.
It's never, it's a kind of a weird relationship that people have with the understanding of gold. And it's not this or that. A lot of people get confused with the, like, if one is recommending gold, that means they're necessarily saying poo-poo stocks, poo-poo bonds. It's all the above. It's about having a modest percentage of your overall holdings protected with gold and silver. That's it. I mean, and so I get a lot of people when we're talking to them, they say, well, gold doesn't have dividends, and gold, you have to, when you sell it, you got to hold on to it until you want to sell it, and where would I put it? And I said, well, the answer to, you have dividend stocks, right? Yeah. Well, there's your dividends. This is it has its own um uh you know needs and rather protections of those needs. So I recommend all the above. So it's never a this or that, either or, it's
Right.
both. And so and I've said this before, I think on your show, it's like, it's not a finite commodity. And you have China, India, uh, Russia, somewhat, the BRICS nations. These are cultures that are going through their industrial revolutions right now. They have middle classes for the first time in history, and they're buying gold. So you have more buyers than there ever were. You have central banks that are loading it up. It's necessarily, at some point there's going to be an inflection point. It's going to be an inflection point where the the amount of demand versus the amount that's coming out of the ground is going to send it into a hyperbolic um, uh, spike up.
Hmm.
It's going to have to, because
Yeah.
if you look at the futures markets, the contracts over the like the 7 year, because they're based on the mining industry and what they pull out of the ground. It's not getting cheaper. It's not going to get cheaper. It's going to keep on going up. So the momentary pullback is a buy opportunity. You get the cost average, down, and I say get it, hold it, and let it do what it's supposed to do. It's not about a get rich quick. It's not about, oh, I'm going to buy some and we're going to get, it's going to go through the roof. If you bought it 20 years ago, it was $280 an ounce. You also, and I think we talked about this, the if you had $1,000 back then, $1,000 would have bought such and such goods and services. If you put $1,000 into the United States government's Bureau of Statistics inflation calculator from 2004, you need 1,650 today, 1,650. So you lost 65% of your purchasing power in 20 years. Gold, imagine if back then you put an ounce of gold in safety deposit box, you paid $280 for it. You had $700 left over from that $1,000, and you put the 700 in that inflation calculator. You need about 1,100 to do what 700 did back then. Well, you now have a 1 ounce coin that's worth almost $2,700. You've offset your loss of purchasing power.
Hmm.
And that's what it does. If you historically, it has always found, it has had that relationship with the, the undulating, uh, uh, value of the dollar, and it reciprocally moves with the precious metals. And it's, I mean, pretty much every indicator is pointing up, and there's a number of reasons why. I mean, Donald Trump's policies that he's planning on or uh, planning for are highly inflationary. And I say that, I think these are good, these policies that he's pushing for, but they're going to come with some pain. And the whole austerity, tightening your belt and tightening the your we heard a lot of that back in 2008, where countries around the world were tightening their belts, and promoting austerity. And while the U.S. central bank was printing, 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 just well, we're back where we probably should have started. We have to tighten up, and we have to, you know, we have to, put the regulatory state, the government, on a long overdue diet. You know, it's too bloated. There's too much waste. And so we'll see what happens. And we've talked about silver too,
Right.
which you know, um, silver is. I say silver is the better deal right now, just because 30% of all silver that comes out of the ground goes to industry. The AI, solar, circuitry, medical field. 30% of all the silver that comes out of the ground goes into these businesses. And then, you know, JP Morgan is like they're the largest holder of physical silver in history. JP Morgan, a bank.
Mm.
Warren Buffett has been in and out of buying silver for the last 30 years. It's ridiculous. I mean, why people don't just load up if
Hmm.
you can? I mean, even a little bit at a time, you know, just you'd be surprised on the forecast for silver, is very, very positive. It has a 55 to 1 40-year relationship with gold. So where gold is right now, solidly, silver should be about $49
Hmm.
if you factor in that ratio. Um, and given that they're trying to make it a critical metal, a couple of banks in Canada and the US are pushing for it to be recognized as a critical metal. Which, if that happens, then there's certain protections that it'll have, and as far as the it will be utilized in within those protections, to whatever degree, and I think the price will explode at that point.
Yeah, and I think that's what kind of leads me to the last question is you're talking about silver and how it's maybe just a better overall buy right now. So, someone's watching this or listening to American Ground Radio, and they've been hearing the commercials and watch these interviews. So they've never invested before in gold or silver or other bullion. So what would be your recommendation to someone just who maybe not quite sure and make that step, that first step, what they need to do first?
Sure, sure. Typically I always recommend like a 60-40, which is 60 gold, 40 silver. I would say 60 silver, 40 gold right now, just because silver has been lagging and it's never real time in adhering to that 55 to 1 ratio. So people say, well, why isn't it, it's got the 55 to 1. Why isn't it there? Well, it's never real time. And when silver moves, it moves very quickly. Um, so I would say, and with the thing with silver, you can start off, with a nominal amount and just build it, build it, build it, and it's cheap, very cheap right now, ridiculously cheap. There's I mean, I have my own theory about why it's as cheap as it is, given the paring down of all the mining companies. It's going to be about four or five big mining companies over the next coming years, where they used to be quite a bit. So the majors are buying out the juniors, and if you were in the business to buy out, if you were Barrick, one of the biggest miners out there, if you were looking to buy out the operating juniors, you'd have an invested interest in keeping the underlying asset as cheap as possible. So there is reason to believe that it's being held down for, it's been, in and out of claims saying that it's been manipulated down, and so be it. I say load up, and when it goes, it's going to really go, and it'll be, I think your it'll be like an asymmetric type of growth,
Mm.
versus I think what was is fairly steady with gold. You'll see and this happened in April 2011 too, where, it shot up, and, people took advantage of it, and, you know, and some of them, you don't want to get on at the peak, very top,
Mm.
you want to get on right at the bottom, where we are.
Paul, we appreciate it as always, and we'll talk to you in a couple of weeks. But again, we want to make sure someone wants to reach out to you or
Sure.
someone else at Freedom Gold USA, how to get a hold of you guys or how to get in contact with you.
Yeah, yeah. You'll, call 888-411-1746. You can go to our website, go www.freedomgoldusa.com /AGR, American Ground Radio. And then if they call in, you guys have very intelligent, savvy listeners. So, if you guys call in, we'll bend over backwards. We have special deals for you guys too. We lower the starting place that we tip, we generally have minimums, but we've kind of erased that with any of your customers that call in, and no commitment, even if they just want to learn a thing or two, and they don't have to do it, they don't have to buy. We'd love to talk to them, and if they like what they hear, maybe they're going to refer a name. It's how we built our business. We're not an aggressive, one of these, the big companies where, we're going to pound it into your head. You got to do this. It's all about fear. It's not.
Yeah,
All the
used car dealers of pressure.
Yeah, yeah, yeah. It's my God, it's out there. But well, great talking to you.
Yeah.
It's yeah, we can look forward to talking again, and we're here, and so like I said, just www.freedomgoldusa /AGR, and 888-411-1746.
Well, we appreciate it.
You bet, man.